events and themes this week. Move out of the way, Euro. This week it's all about sterling and the dollar. Starting off with the pound, then a few key bits of data that we have this week in terms of economic points. Starting off with inflation. Last month we did actually see a surprise pullback to 2.6%, but it's expected to continue its vigorous rise in the prices across the board to 2.8% this month. If you do know, a lot of economists and also the Bank of England themselves are forecasting for inflation to hit the 3% mark before the end of this year. Now, if the number does come in higher than expected, expect a decent amount of GBP strength across the board to continue to push higher, as pressure will mount for the Bank of England to raise rates in order to try and cool inflation there. To tie into that also, we do have labour market data in the UK. That's expected to remain very buoyant and good. The key focus though will be the average earnings. That's expected to pick up to 2.3%. What I would say is though, it's still lacking behind and being outstripped by the rise, or the drastic rise in inflation at the moment. And what that means is it affects consumers' affordability in the UK. But nevertheless, if we do see that pick up, then expect some decent strength for the pound. If we're looking at cable, specifically sterling dollar, as we know it, much resistance is seen at around 133 mark, so we could most likely run into that for the bulls, taking that higher for GBP, but that could be slowed down drastically, as on Thursday we do have the Bank of England's rate decision. Policy expected to remain unchanged, but the key thing is the vote split. Now, they're back to their full capacity of 9 members after the recent appointment of the Deputy Governor, Sir David Ramsden. Now, he's expected to hold a dovish tone in terms of his beliefs for the UK currently. So this could see the vote split go to 7-2, so only 2 voting for a hike in rates. And if that is the case, well, that run that we could see at the first part of the week could come to an end for GBP dollar. And as I say, there's a lot of resistance seen heading into that 133 zone anyway, so just be wary of that. Looking across the Atlantic, then over in the United States. Now, the dollar did suffer quite a bit actually across the board last week. Not one particular catalyst, but a few reasons just to keep in your minds, guys. We had the unfortunate hurricane tragedies, which has caused some issues economically for the US. North Korea, obviously with the US being involved in that, and also just currently the lack of progress in terms of moving forward with monetary policy from the Federal Reserve at the moment. It's a bit of a wait and see mode, so that all of those accumulated are weighing on the dollar. There's a lot on its shoulders at the moment. This week though, key focuses will be inflation data, CPI and PPI. Prices are still expected to remain subdued, not expecting much pickup here at the moment. But interesting commentary actually coming out of a few Fed members last week actually. They said despite inflation remaining low, that the Fed should continue to move forward with their tightening of policy and continue to raise rates. But if they do that, it's going to cause some problems if they do that too prematurely at the moment, because inflation's low. Do they want to slip into deflation? I'm sure they don't. So I think they may have to just wait and see for the time being. And we also have retail sales data. We did see a surprise pickup last month, but consumer spending at the moment in the US is still quite soft, and they seem reluctant at the moment in terms of US citizens to spend their money, as we've seen sort of over the last few months. So nevertheless, I think this week for the dollar, it could be in some trouble. As we've seen, if we look technically at the dollar index, it has seen a drastic move lower. We cleared, there was a lot of support seen around the 92 mark, and it could look to free fall, guys. I'm not seeing much support until around 85, 86 area for the dollar index, which means the dollar could certainly lose a lot of ground across the board against other currencies. So just be very mindful of that this week. The dollar could be in some trouble. Then looking over in Switzerland, we have the SNB rate decision. Now, why I mention this, we're not expecting any change in policy, but as we've seen, quite a large amount of Swiss franc strength across the board, because we're in unsettled times at the moment, a lot of geopolitical worries, so we have seen a flight to safe haven. That's been the general theme of the market. So clients or market participants putting their money into the Swiss-based assets. So the Swiss franc has really been gaining across the board. Only not against the euro though, because the euro has remained strong itself, but against the dollar and other currencies really. So with the SNB, they could likely to remain dovish, and as we know, they like a weak currency themselves, so they could really talk down the Swiss franc and speak specifically on the exchange rate and the value of the Swissy. So just be very mindful of that, guys, with your Swiss-based positions this week. Oh, that's it from me. I hope you have a smashing trading week. Thank you.